Bismillahirrahmanirrahim. Assalamu alaikum students. Yesterday class we will talk about the some basic concept related to accounting. We will discuss the double entry system and we record double entry system from business transactions. That is the double entry we will record by using this transaction. Yes. We talk about the double entry, then we will make ledgers from double entry, and at the last we make the trial balance. So I will make a trial balance. This is the last step from point number 1 to point number 4. We talk about the business transaction. Business transaction is the daily operating transaction which is performed by the business either to sell a goods, or to purchase something from supplier, or to take a loan, or to other expenses. So we will record double entry from business transaction. From double entry we will make ledgers. Ledger also called T accounts. And now we will make trial balance from the ledgers. After the trial balance, when we will make further concepts related to point number 1 to point number 4, and when we learn a lot of things, and then finally we will prepare statement of comprehensive income and statement of financial position. This will be our main target area where we want to reach. So we'll make trial balance of this business transactions. So in the last session I will make all the ledgers. So from these ledgers we'll make the trial balance. Trial balance here is the debit side and the credit side. How many ledgers we opened in last lecture? We opened 7 ledgers. 1 2 3 4 5 6 7 ledgers. So 7 accounting head will appear in our trial balance. Number 1 is bank. The bank has debit balance, so bank will have debit balance 41,000. So number 1 is bank. Bank has a debit balance of dollar. We can write a denomination that we are using dollar as a currency. So bank has a debit balance 41,000. The second accounting head will be capital. Capital has a credit balance. Capital has a credit balance of rupees, of dollar. Can anyone guide? That is the 80,000. Capital has a credit balance of $80,000. So we can write 80,000 at the credit side. So the next item will be fixture and equipment, having a debit balance of 30,000. Debit balance of 30,000. Accounting head name fixture and equipment. The fourth ledger will be cash, having debit balance of 15,000. And the fifth one is AB loan payable, the credit balance. AB loan payable has credit balance 10,000. AB loan payable is the liability. So liability has credit balance of dollar 10,000. So in the credit side we will write 10,000. Number 6 ledger will be Motor vehicle account has a debit balance 9,000. Debit balance. The account name is motor vehicle. And the last ledger we opened last lecture was the Malaika loan payable, having a credit balance 5,000. Credit balance, loan from Malaika. That is the liability towards business. So we'll write all the ledgers and put the balances of ledgers into the trial balance. So we will total the debit side and credit side. If the both sides are equal, it's mean we'll make the correct trial balance. So we can total 80 plus 10, 90, 90 plus 5, 95,000. So the credit total is 95,000. You can total the debit side, it will also be the 95,000. So debit side is equal to credit side. It's mean our trial balance is balanced. So that's mean trial balance mean your debit side must equal with credit side. So this is the way where you can transform and posting ledgers into the trial balances. Got it, student? Any question at this stage? Any question?
No.
Okay, so this is the way. Firstly, this is the business transaction. From business transaction we made the journal entry, that is the double entry. From double entry we make the ledgers, and from ledger we finally make the trial balance, and from trial balance we will make the income statement and balance sheet that we will make further. Now I'll give you the homework of this question. So you prepared journal entries of this business transaction and prepared the relevant ledger, that is T account. Now you have to prepare trial balance. So you have to work on it. Okay, now we will move further. We talked about the ledger. What is ledger? We talked about already. We talked about work example 1. Work example 1, you have this 5 business transactions. Requirement. What is the requirement? The requirement is enter the transaction in Bola's ledger. It's mean you have to make ledgers. By the preparation of ledger, first of all, you will make double entry. You will make journal. We will make journal. Then you will make ledgers. This is our requirement. First you have to prepare journal entry, then you will make ledger from this journal entries. So this is your again homework. You can solve by yourself. Work example 2 also have 5 business transactions. The requirement is Greta's ledgers. So again, firstly you have to prepare journal entries. And in second step you will prepare the ledgers. So this is your again the homework. You can solve by yourself. Work example 3. Now these are the 4 transactions. Again you will prepare ledger. This is the homework number question 3. So these 3 questions will be your homework. Now we move to the next concept, that is the division of ledger. What is meant for division of ledger? Instead of making the hundreds of ledgers, because we will do sale to different customer, we will purchases good from different supplier, hundreds of supplier we can change throughout the year, throughout the accounting period. So instead of making the a lot of ledgers, we divide ledgers into sub ledger. So we mainly use three type of ledgers. Number one is sale ledger, where we record every credit customer transaction. Credit customer transaction will go to the sale ledger, and the second ledger we will prepare, that is the purchase ledger. Credit supplier, if anything we buy from the supplier on credit, every credit transactions, every credit purchase transaction will be recorded in purchase ledger. Every credit sale transaction will be recorded in sale ledger, and any other who will not fall in the category of sale ledger and purchase ledger, we will record in the journal ledger. So we divided ledgers into three ledgers. Number one is sale ledger, second one is purchase ledger, and third one is journal ledger. Ledgers mainly divided into three categories. Number one is sale ledgers, second one is purchase ledger, and the third one is journal ledger. In sale ledger we will record credit sale. In sale ledger we will record credit sales. All credit sale will be recorded in sale ledger. All credit purchase will be recorded in purchase ledger. All transactions in journal ledgers, we will record all transactions other than credit sale and credit purchase. Why? Because we have specific ledger for credit sale, specific ledger for credit purchase. So other than credit sale or credit purchase transaction, all transaction will be recorded in general ledger. So actually we have three types of ledger. Sale ledger, where we record credit sale, purchase, where we recorded credit purchase, and that is the journal ledger. Every transaction which will not be the credit sale or not relate to credit purchase will be recorded in journal ledger. Got it, student?
Yes.
Okay. So here is the work example for Nadim purchased good for resale $73. He pay cash. So can cash transaction will be recorded in any ledger? In which ledger we will record cash sale? In which ledger we will record cash sale? Can you tell me? In which record we will record this is the Nadim purchases good for resale, he pay cash. So this is the cash purchases. Cash purchase transaction will be recorded either in sale ledger, purchase ledger, or in journal ledger. In which account?
Purchase.
Purchases. Any idea other than? Oh, astaghfirullah. How can you say this? Say, because Nadim purchases goods, it never be recorded in sale. Sale is the never. You have only two options. Either you can record in purchase ledger or you can record in the journal ledger. So the student, the answer will be journal ledger, dear, journal ledgers. Because you can see this. I write this word all credit purchase. I didn't write cash purchases. I didn't write this. Okay, in purchase ledger we will record only credit purchases, not cash purchases. So the cash purchases will be recorded in journal ledger. Got it, student? Can you pick this concept?
Yes, sir.
Okay. So the second, Nadim sell goods $19 for cash. Where we record this transaction? Where? In sale ledger, in purchase ledger or journal ledger? Read this transaction again and now tell me. In which account should I record? Hurry up. It's not a big deal. So dear, it's again cash transaction. So it's again cash sale. So this will be recorded in journal ledger. So again we will record the journal ledger because in sale ledger we will record only credit sale. Do you know what is meant for cash sale and credit sale? Do you know this? What is credit sale and cash sale? First tell me. So you have to remember this. In sale ledger we will record the credit sale. It's mean we sell goods to the customer and we didn't receive any money from the customer. Or here the purchase ledger we will record only credit purchase. So all cash sale, all cash purchases will be the part of journal ledger. Okay, next move. Can you solve this 4 transaction? And can you tell me where these transaction will be recorded, either in a sale ledger, purchase ledger or journal ledger? Can you solve? You have to solve and show your working via my WhatsApp number. Show your working and send it to me. I will check, okay? And you have to tell 2 things about this transaction. Number 1, for example, I will tell you this first one how you will solve. So Ivan purchases a non-current asset $1450 from Adil on credit. So can I say this? This is the transaction which is done on credit. This is a transaction which is the purchases which is done on credit. Can I write this? Can I write this in purchase ledger? Yes or no?
Yes, sir, you can.
No, I will not.
But why? You can't, sir.
Although these are credit purchases, but here is a catch. This purchases is not a regular inventory. This is the non-current asset we purchase.
Asset, okay.
Non-current asset.
If it was a current asset, then you could have done it.
No. If regular purchases, if we purchase good for resale purpose, if we purchases and sell it to the customer for that purposes will be credit purchases, and
But
that
current asset is one of them then.
current asset will not fall in the category of this credit purchases. What does purchases
this
mean?
current purchases. Okay,
Purchases mean you have to clear word purchase. I don't know where you Purchases mean, assume for example we have a mobile shop. We have a
Yeah.
mobile shop. What's the purpose of mobile shop?
Selling phones.
Buy mobile from supplier and
Reseller.
sell it to the customer. So we purchase mobile. We purchase mobile on credit.
Yeah.
For example, $10,000. We purchase mobile on credit, that is $10,000. So this is the credit purchase, and we will record in purchase ledger, because this purchase is the regular inventory of a business. So we will record in purchase ledger. Another example, business purchase hand free on credit for $1,000. Where I will record this transaction, sale ledger, purchase ledger, journal ledger.
Purchase ledger.
Why? Because mobile shop has a business to sell hand frees to the customer, so this relate to the business. So again,
Yes.
we will record
Purchase ledger.
purchase ledger. Now focus on the third one. Now focus on the third one. Business purchase air condition for its own use at for example $2,000. Where I record this transaction?
General.
So this is the purchase, but this purchase is not the mobile shop requirement, because we purchase AC not for resale purpose, not for the purpose to sell it to the customer. So these purchases will be our asset. This AC is our asset. So asset will record in the ledger of journal ledger. So we will record this purchases, because this purchases, we can say this is the purchase of non-current asset. So we will record in general ledger. So the purchase ledger will be the main activity of a business. Get it? Okay. So this is non-current asset. We will record in the general ledger. Now you have to solve second, third, fourth. Can you solve it, or either I solve myself? Can I solve, or you will solve? Tell me. Okay. You can solve and show you're working with me. Okay.
Okay.
And you have to record all the business transaction into the relevant ledger. And here is the answer. You can tally your working with these answers. Okay.
Sure, sir. So can
Okay.
you go up for the question?
Which question?
The up one.
The question number is
Yeah, this one. Yeah, okay, never mind. Okay.
Okay.
You can continue.
The second one is the accounting equation. What is the accounting equation? The accounting equation can be written in two forms. Number one is asset is equal to capital plus liability. So the accounting equation we can write in two forms. Number one is assets. This asset will be the total assets. Consider be total asset having non-current assets and current assets. So asset is equal to capital plus liability. Capital we can capital actually is our equity. So the equation can be written in the form of asset is equal to equity plus liability. So because equity mean the equity is the broader term than capital, so we can write asset is equal to capital plus liability. Either we can write asset is equal to equity plus liability. This is the accounting equation. So our asset side should be equal with capital plus liability side. Okay. Now what is the format of asset? I will share the comprehensive format with you. What is the assets and what is the liability and capital, etc. As you know that the asset, equity, liability, this all about accounting equation is related to statement of financial position. Either we can write here, maybe this accounting equation belongs to statement of financial position, that is the balance sheet. So accounting equation we can write asset is equal to capital plus liabilities. And another name of capital is equity. So these all three belongs to statement of financial position, that is the balance sheet. So this is the examples relating to accounting equation. We have some assets: premises, van, shopping, fittings, inventory. These three are called non-current assets. Inventory, receivable, banks are called current assets. So we will total, and 8170 belongs to total asset. So capital is 43,820. Liability, loan used to buy premises. Bank loan owed to van. Total trade payables. These two loans belong to non-current liability, and trade payable belongs to current liability. Do you know about the differentiation between non-current asset, current asset, non-current liability, and current liability? You guys have any idea? Any idea what is the non-current asset, current asset, what is the non-current liability and current liability? Okay, now move forward. I just give an idea about the assets, capital, liability. I will not too much talk about this, because this is not our area where I will explain the excessive terms about what is the assets, what is the capital, liability, because this is a very early stage to describe all these items. So we just know about what is the assets and what is the current liabilities and liability, just the definition of this. We don't require anything further, because it's too early to know about all the format of this balance sheet. So the next thing is the role of book of prime entry in the recording of business transactions. So what is the book of prime entry? Book of prime entry mean in early accounting will record the business transaction. From business transaction we will record journal entries. From journal entry we will make the ledgers. From ledgers we will make the trial balance. So instead of making the double entry or ledgers, we make the books of prime entry. Books of prime entry provides the basic recording methodology to record accounting entries. So instead of making a lot of journal entries, a lot of ledgers, we will record the business transaction as per the books of prime entry. So before entry are made in the double entry system of accounting, there is a further stage of recording financial transaction. So books of prime entry is alternate way to record the accounting transaction. The early, which I was tell you, the first one we will record business transaction. From business transaction we will record the journal entries. Journal entries we will make the ledgers. Ledgers we will make the trial balance. So we have another route to make trial balance, that is the book of prime entry. Book of prime entry, in book of prime entry we have 6 books of prime entry. Total we have 6 books. Number 1 is sale journal, second one is sale return journal, third one is purchase journal, fourth one is purchase return journal, fifth one is cash book, and the sixth one is general journal. One by one we will talk about the every concept. Number 1 is sale journal. Number 1 is sale journal. When goods are sold to the customer, the sale invoice item, the goods have been sold and the price of goods, a copy of this invoice is retained by the seller. A copy of sale invoice is the source document from which the sale journal is written. The copy of sale invoice sent to the customer are used to prepare a list of credit sale made. When it is convenient, this could be daily, weekly or monthly depending on the volume of sale made by the business. Each individual customer ledger account in the sale ledger is debited with the value of goods sold to them, indicating that the customer has received the goods. In sale journal, we will make all credit sale. In sale journal we will record all individual credit sale. Like this, sale ledger will sell goods to the A, so we will record the A ledger. We will sell goods to Emily Smith, we will record the ledger of Emily Smith. We will sell goods through C and S, we will record the ledger of C and S. So in sale journal we will record every single customer information. Get it? And the total of these sale journal we will record general ledger of sale. So the sale ledger which record the individual detail of every customer is a source document of book of prime entry. So book of prime entry mean we record sale, we will record the sale. So what's the source document of this sale? The source document of this sale is the individual sale ledger. So from individual sale ledger we will record the all credit sale related to our books of prime entry. So the sale journal is not an account, it is only used to gain entry into the account. So at first stage we will record every credit sale transaction of every independent customer, and then total the amount of every ledgers of independent customer, like 547 912 Emily Smith, 912 sale to Emily Smith, and the total of this individual ledger, that is 1477.77, will goes to the general sale ledger. So this general sale ledger is called sale journal. Any question regarding this?
No, sir.
Okay. So first, this is the first stage where we record sale ledger of individual customer. Then this individual total will goes to the sale journal, and the total of this balance goes to the general sale ledger. So the next source, the next books of prime entry will be the sale return. Sale return mean goods returned by the customer. Sale return mean goods returned by the customer, and a credit note is sent to the customer. In case of sale return, a business send credit note. Credit note mean good return by the customer, or it is the sale return of the business. So if customer return back goods to the business, so this is the sale return journal. What we will do in sale return journal? Number 1, copy credit note. Copy credit note. Credit note mean it's our sale return. In case of sale return, the business issue credit note. So this credit note mean a business has some sale return, then sale return ledger, sale return journal. Sale return journal. In sale return journal, we will record every individual sale return. Then we'll total the sale return, and that sale return will post into the general ledger of sale return, like this. The same procedure will be followed as per the recording of sale. So we will record individual sale. We will record individual sale like this and total it, and that total amount will goes to the general sale ledger. So same is the case. We will record the sale return of every individual customer, then total it, and total amount will go to the sale return journal, sale return ledgers. Get it? This is the rough idea. You will get it more knowledge when I solve a question. Then I'm telling you the average stage of putting average stage, and I will tell you the average stage. How can you put the values? From where you get the values, and how can you make the individual ledgers and total, and then finally send it to the general ledger. And the third document is purchase journal. Purchase journal mean credit purchases. Credit purchases, also known as purchase day book. In purchase day book, we will record every credit purchases. When a purchase invoice is received from supplier, it is shows that good have been purchased and the price charged. Wait. The purchase journal is a list of credit purchase that I told earlier. In purchase journal, we will record the credit purchases. The source document or the purchase invoice received. Purchase invoice received is the source document. Source document mean it is then evidence that we purchase goods from that particular supplier. This is the important line you have to read. Each individual supplier ledger account in the purchase ledger. So in the purchase ledger, we will record each individual ledger. If we have 5 different ledger, we will make 5 ledgers of individual supplier. So in the purchase ledger, we will record every individual ledger with the value of good purchase. Then the total amount will go to the purchase journal. Get it like this. In purchase ledger, we have 4. We have 4 different supplier. So first of all, we will make the individual independent ledger of all the suppliers. Then total of this supplier amount 125.7, 76.4, 1261, 99, and then this total amount will go to the general ledger of purchases. So this is the amount relevant to this one. That is, we make double entry ledger. At earlier we make the purchase account, and this is the debit balance of purchase account 1562.20, and this balance will directly goes to the trial balance. So this amount will go to the trial balance directly. Okay, so you have to read about only these three documents. In the next session, next lecture, I will learn the more about the remaining three ledgers, and after when you read all these 6 books of prime entry, I will solve a comprehensive question where all 6 books of prime entry we will use. Okay,
Okay, sir.
okay. Any student have a question?
No, sir.
Okay, take care of yourself. Now wind up this session. In the next session we will discuss from point number 3 to onward, and we'll solve a comprehensive example. Thank you so much. Take care. Allah Hafiz.